All right. Good morning. It is 8:02. This is Vince Lanci, and you are on with the Gold Fix. It's 11:08, or as our friends say across the pond, it's 8:11, which is actually more accurate. Day, month, year, not month, day, year. But I'm no Anglophile. I am a common sensophile, though. Okay, so we're going to go through the market. I think I'm quite excited. I think I have a format that's going to work for us. I'm on the road. I apologize if you hear some ambient noises, but I think I have a format. I think that's going to simultaneously appeal to active traders, to gold bugs, and I say that with love, as I am one, uh, and also to people that are interested in mining stocks. If you look at the sources of people that come to this broadcast, there are three distinct sources that have some overlap. My skill set, other than trading, uh, uh, is an ability, I've been told, to explain complex things in terms that people can understand. And I guess that when you have a couple kids, you have to figure that out at some point, right? So what we're aiming to do is what I'm aiming to do is have something for active traders. That is, the subscription base comes to this site for active actionable levels, and gold, silver don't offer a lot of those on a daily basis, but when they do, you pound tables. For those subscribers that are more actively trading equities, I want to give perhaps some insights into market moves and ideas that they can look out for in the future, kind of like a learning from history or an autopsy on a trade. Like today, we'll be discussing what happened with the VIX yesterday. And at the third level, the level that actually was my first education at Lehman Brothers, when it was really a proud place to be a part of. Um, I'm going to break out the fundamental analysis, and we'll start talking about gold mining stocks. I do not claim to be a gold mining stock analyst, but because I've paneled several slash many, I don't know what that means, but because I've been a panelist on gold um, mining conventions, which are almost always dog and pony shows for people trying to get miners money raised, they put me on as the macro guy. I'm on a lot of mailing lists and get a lot of research. Some of that research is great research. Some of that research is sales marketing material. But if you're a person like me who was tasked with going through K1s and earnings reports and things like that, things long ago that people don't care about anymore now. Uh, uh, Hopefully to be helpful to you. I'm not going to opine technically on companies, but I do have research, and at first we'll just show that research to you. So why don't we go through the market? If you have suggestions in terms of format, as I go through this, give me a couple days. I will take heed of them. The first format, I guess, would be to get off of the phone, but sorry, that's not going to happen today. Just consider it homey. All right, gold fix, teetering on a cliff. All right, these are the categories we'll be using from now on. Money will be the title. What happened yesterday? What has happened so far today? Yesterday's trades, other money. That would be a comment on the FX market. Outside markets, that would be a comment on anything that could be a driver. Reading the tape, if there is something there, occasionally you'll see that. And we'll talk about either data or something that I think is relevant. Technicals that are courtesy of Michael Moore, and I'll give you actionable levels. VBS means volatility based system. RTM is the newly regression to the mean system, which is an inversion of VBS. I will let you know on a low, medium, high conviction rate, looking almost always at gold, because so even if there's nothing to do, there's something to learn in how to use these type of systems. And if there's something, but it doesn't mean I don't look at silver. It doesn't mean I don't look at other metals, but I won't put them there unless there's something actionable. And today I put a relearning moment. That's because what happened in the VIX. and my comment about mining stocks, and you want to be careful if you're gold long right now. All right, so why don't we start at the beginning? All right, as of the writing here, all right, we're going to go sideways. Hopefully that'll be easier on you. Okay, yesterday, in a sentence, stocks were up, the US dollar was weaker, and gold had every reason to rally, but it did, so it sold off. We suspect this was at least in part a VIX type liquidation. I'll get to that in a second, where those who punted long gold puked when the end of the world did not happen. Okay, two sentences. Call my lawyer. So far today, all right, and I say that as of this writing, which was about 7:15, 7:30. Gold and its precious brethren are slightly lower. The PGMs are off, tied to copper today. Pay close attention to palladium and platinum, not necessarily to trade them, but to sometimes palladium will lead, sometimes platinum will lead, sometimes palladium will act like copper, and then sometimes palladium will be what silver used to be. So you can see everything is on the metal side is in the red. The dollar is flat to slightly higher. Remember, the dollar is overweighted in the euro. Uh, Palladium, which has had 1% moves up and down, is becoming more and more. Uh, I think palladium is very important, and not only is that from a professional that I've worked with and known for 30 years, it's actually one of our subscribers who is probably too modest to take credit for it. But if you listen to people uh, that subscribe, there is at least one guy in there who understands long-term correlations between metals in a way and studies them in a way that I don't. And uh, he's very sharp. I can let him identify himself. Okay, so gold's moneyness opinion seems to be why it is the least damaged if one were to, okay, so I'm butchering English language there. If one were to look only in context of this 24-hour period. All right, I'm going to do this again. Hold on to your seats. I think I understand what this is. Okay, this is important. I think this is very important. I would encourage more and more FX people like Mike and John, who I love watching their comments because there's some valuable information I'm getting from trading people that I speak with overseas. All right, Trader members trading Asian pairs like the Aussie dollar and Japanese yen would be well informed that the New Zealand dollar seems extended by technical and by VBS measures. Am I going to trade that? No. I'm also going to say that there's a large option struck at 68 cents that expires today. What is today? That's a good question. I'm not sure if that means US hours, but I really try not to bother these guys too much when they're kind enough to get me to talk to me at 2 in the morning. Factor that however you may in your own trading calculus. Also, there are about $62 billion in euro options, $62 billion in euro, $60 billion notional in euro options in the strike between 113.75 and 114 and a quarter, and another 7.7 billion euro between 115 and 115.40 that expire. So trade accordingly. It's a magnet. It's a pin. My point is, come noon, if you see a move in the dollar, or if you're looking at gold and you see a move in gold, check the euro first for confirmation or dismissal. Outside markets, people treat gold like it's a piece of junk, so we're going to be a little bit snobby here. Outside markets, the markets that take their cue from us. Yes, I'm being a little bit facetious. All right. The yuan is flat to slightly higher. That would mean, again, I keep repeating this. I actually do this for my own benefit, not just the listeners. Higher yuan is a weaker yuan. It takes more of them to buy a dollar. So that in and of itself, all other things frozen in time, the weaker a yuan is, the less likely the Chinese are to buy raw materials. That is a very strong driver of these markets macro, and sometimes an extremely strong driver of these markets in an acute moment, but you never know minute to minute what the market is focusing on. The yen, there's a big expiration in the yen today. I'm not sure the strikes. Again, when I say today, I think I'm referring to US time. uh, uh, like a CME or an OTC that coincides with CME, probably a lookalike OTC. All right, the euro's flat, British pound flat, so we can have a non-exciting day. I guess it's an election hangover. The emerging markets, you don't see it on the screen here, but the Turkish lira is a little bit weaker today. Italian bonds, I'm going to keep bringing that up until they don't matter anymore. Bonds are a little bit, bonds are largely unchanged or mixed, with Italian bonds a little bit lagging today. So that's a tape watching comment. All right, reading the tape. All right, I think this is important for whatever you're trading today, not just gold. The Federal Reserve meets today for the last time in 2018. There will be no press conference. There's virtually no doubt the Fed will stand pat today. Raising rates or moving action in November doesn't usually happen. They usually work on the quarterly basis. Given info and markets, a December hike, excuse my clipped language here, a December hike should be largely priced in. This is me thinking out loud. A December hike should be largely priced in, but it is not. And I say that because if you look at multiple models like Bloomberg and some exchanges have futures, multiple models suggest an 80% chance of a December hike, uh, discounted. That seems grossly low to me. And as an arbitrator, my knee jerk reaction is okay, I'm a buyer of 80% and I'm a seller of either stocks or equity puts, meaning if the Fed raises rates, if the Fed doesn't raise rates, or maybe I'm Texas hedging there, but the idea basically is if if there is virtually no doubt that the Fed will hike rates, then that hike should be, then that 80% should be closer to 95%. So, I see no reason for that given the market behavior, the bounce for that number to be so low. So before I put on my arbitrage shoes, whether I'm Texas hedging or not, uh, uh, let me give you an idea of how I educate myself. All right, and that will be looking under the hood here before cementing our opinion is warranted. All right. So for listeners, I dug in a little bit, and a couple things jumped out. All I had to hear was the first one, and I knew that I should not do a trade. And that first one was that the futures that are on these exchanges or that Bloomberg uses are basically path dependent or Asian options, Asian priced or average for the month. So it's an average calculation. So you can add another 5 basis points if you're adding trend to it. So 85 to 90% is probably a real number. Plus, there's a difference between how the Fed raises rates, plus is how they lower caps. I won't get into that right now. It's definitely worth learning, but it's textbook type of stuff. Before we get into the volatility numbers, let's look at Michael Moore's technicals. Again, I thank him for that. He is friendly. Get long above 1228.90. That's a moderate suggestion. Get long above 1237. If we break above here and back below, look for profit take. Very, very frequently you'll hear him refer to his numbers. He doesn't. His numbers are numbers. So long above, reverse below. It could be even more. You can read the rest of that on your own. Downside, get short below 1226. So his numbers are pretty narrow. 1226 to 1224 is his range to get short below, and 1228.90 to 1231.30. This is basis December futures. For those of you that trade spot, I am a spot person by genetics, but I execute in futures. So his range, we'll just put it at a mid number, is 1230 to 1220, 1226, 1225 to 1230 would be his $5 range. Consider that as a range, and the average daily range I think is around $6. You can read the rest of that. Let's move on to the VBS and RTM levels. I'll give you bigger charts now. All right, so the reason these charts are in order where they are is this is the cash market in gold. If you want to equate that with December futures, and I think it's important to understand both of these, you add about $1.60. The cash market on the 60-minute is no apparent help. I have nothing showing on there. Doesn't mean we won't go higher or lower. It just means that the risk reward does not prevent itself. All right, moving over to the this is where it gets interesting. I think we should be on alert here. On the daily uh, spot gold, you see that we have, well, you may not see it, but I'm going to tell you that we have 2/3 of what we need for a signal to be there. So above 1234.60, below 1218.80 on an hourly close basis. I would be bearish below and bullish above. You can look at those numbers as numbers to fade, and if you're playing the range. I look at those numbers as reasons to get long. Uh, this is not a black box. And by that I mean is even if you get the signal, sometimes I don't do the trade because the market will run. Again, that's a reason for constant weighted volume bars, which we will get into some other time when I show that. Now, the reason I brought that up on the spot is if you look at the daily, all right, if you look at the daily futures, it's even closer. I'm not going to disclose why, but it's even closer to being a signal. If we were to close below 1221.59 on an hourly basis, and that number will change every hour. I know people have asked me, well, if it's bearish below 1221.59 and it's bullish below above 1236.95, should we reverse? Should we consider reversing if one is violating and the other does? I frequently the answer is, and it's not gray area, it's black and white. If we go below and reject in the same hour and go above, yes. If you're a person who is a fan of market profiles, that would be similar to a running profile day where it looks like it's a trend day in one direction and then reverses violently. However, after the hour where one side or the other is penetrated, it's off the radar until another cycle comes. So I'm bearish. I'm biased to the bear side below 1232, and I see us hovering above the teens again. And we did go into the teens instead of there one day, but I wonder what's going to happen if we go in there again. So I'm on the alert for a sell signal, which I will act on today um, if I see the third piece of the puzzle. 2/3 are there. One is I have the Bollinger Bands representing a level that I feel is a safe risk reward based on how implied volatility is trading, which I'm not going to share at this moment. That's not free. And I'll give you a little tip. If you look at the lines below, HV5 and HV20, when HV5 is a certain ratio of HV20, that is the other indicator. Moving on, it's 821. I may have to move on. Weekly, if you've been following, I've been saying 1260, 1270. Well, another week has gone by, and that level is now 1240, 1250. So if this is an orderly rally higher, I would not expect so much buying in the 1250 area this time. Okay, there may be more there. Okay, pre-election VIX levels. I'd like you to read that on your own. We can, if you have questions on it, we can discuss it in the chat. But basically, it's a classic example of a crowded trade, and you see a lot of these in earnings, before earnings. But the VIX trade, I should have been all over that. I just was not in a position to do it. Mining stocks, we will be covering mining stocks soon. First, as a pass-through research we receive, as I alluded to earlier, and hopefully after we dust off our financial accounting books on a more analytical basis. Subscriber listener notes here. I think I loaded those front. This is supposed to be a GIF, and it's not moving, which is very sad because this guy does a little backflip and he's teetering on the edge. Hence the title. Before I let you go, it is 8:22. And by go, that means before I get off and then get back on for the 8:30, you should be here. The DXY is flat. DXY is flat. Gold is has bounced off its lows. All the metals have moved a little bit higher. For what reason, I don't know. Why don't we go to the gold hourly right now to see what we're looking at? Okay. Remember, we like to talk about it between midnight and 3. So on the 8th, we did have a buyer. We also had a big seller, and it left a long wick below. To me, that is bullish intraday. So I can be bearish below 1232, but bullish above this wick area. So as of right now, I'm just going to go strictly by the book and go with the VBS numbers, which come in around 1221 and change on the downside. And I forget what it is on the upside, but you can look for yourselves. Uh, Ending, as I mentioned, stock markets are firmer on the back, with the exception of Asia, mixed to firmer on the back of US, Europe benefiting the most, and the stock market is flat to down a little bit. And the VIX will now go to 0. But hey, that's the way it is. Oil up a little bit. Maybe there's a little pressure off of there. I think Larry's trade was a great idea, and I think it might be a more orderly rally. But uh, I'll keep my eye on that. Look for a signal possibly. Natural gas gets a break. All right, everyone. It's 8:24. Have a great trading day. If I get a signal, or if I act, I will put the trade in the trade blotter. If I see a signal pending on alert, I'll put it in the energy commodity section. I say this because we have some new listeners and new subscribers, and my offer still stands. 5 new listeners get you a month, get you your first month free as a subscriber. That's my promise to you. And have a great day. And be